Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, having dodged many obstacles last week, the Friday session for the Australian dollar ended on a bullish note. And from there, the market took the challenge towards that key level, the 68.60-65, but that presently has been rejected. Nevertheless, from the technicals holding up a little bit firmer to the start of this week, I do anticipate that we should see a further challenge to that upside. If we see a break and a New York close above 68.65, therefore would look towards the region of 69.35.75 as a potential target, and still keeping an eye that the 60-day moving average still lingers around the area of 68.92. In light of the current pattern, I still feel there is upside potential to gain as the dollar index, which measures the greenback strength against a basket of 6 major currencies, plummeted on Friday to an intraday low of 108.32 and today's low of 108.58, and now settles around that region. Therefore, with a weaker US dollar, may see further risk to come from the Australian dollar to a bullish outcome, and that is keeping an eye still with the US Department waiting to release the Consumer Price Index on Tuesday, and with the wholesale release on Wednesday. And also that we have this week the Australian unemployment data, which views a number to come around 35,500 added jobs, and also the unemployment rate holds at a 48-year low of 3.4. The euro also holds to a somewhat bullish stance due to the weakness of the US dollar. And along with that, the market still looks for a potential gain to this challenge of around 101.60.80 downtrend, which, as you can see from the broader aspect, is quite a significant line here, given the fact that it emanates from February this year and around 114.5 area. If we can see a break there, then further risk looks towards 104. But there's still many challenges to the upside to give any strong bullish call. But at present, there is enough to support at least that challenge to that upside. If any pullback looks towards 100.35 as minor support. Dollar yen still a little bit somewhat mixed after that weak performance on Friday. Keeping an eye on these technicals, we haven't fully broken down from the midway point, and we still need to see further weakness to support any call towards the 139.5 area. That being said, we did reach the target of 142.5, but as I mentioned, 139.5 is the current view at this present stage, with any retracement, which is currently being seen at the moment, finding resistance somewhere around 143.15.70 area. Well, to this week, the Bank of England's monetary policy has postponed by a week as the UK enters a period of national mourning. The UK bank is expected to, or central bank is expected to hike rates at their coming meeting for the 7th consecutive time, and with the expectation of 75 basis point rate hike on the cards from 1.75 to 2.5. In August, the Bank of England hiked rates by 50 basis points, the biggest hike since in 27 years. Nevertheless, I like the way this pattern's unfolding. First of all, with the bullish hammer, and follow that, nearly got a Marubozu on Friday, but still, I like the way the RSI has posted a break through the midway point and still waiting for that MACD to marry up. Therefore, from the close above 115.70-75 area, I feel that we are looking up towards 116 to 118 as a potential target. Although we're seeing many challenges to that top side for gold, it still hasn't been able to sustain a break and sustain a close of New York of 1,719. To support this, we would still need to see further technicals to support the bullish case and that close. And if we do see a close up above 19, 1,739 to 1,749 is a potential target. Until then, the downside still can be somewhat vulnerable, and that is around that 1,680 level. And finishing off with oil, the market's rebounded in front of that 78.80 area a barrel, but still lacking momentum. Now it looks towards a resistance of $85.70.95. If that still holds, then we can still see one more down test before a bullish correction. But I'm a little bit cautious of that call because the technicals have firmed up a little. So it's really in terms of how the market sees the down test, will they see it as an opportunity to get back into the market, as we could see a rise back up to $91. Well, that wraps it for the start of this week. Thank you very much for joining me. And as always, keep an eye on the intraday report. I hope you enjoy the rest of the day.